Hey guys, here are my thoughts on Bitcoin, cryptocurrencies, the crash on the stock markets, inflation data that has just come out, and of course, the interest rates and what's going on with those. Now, just a quick preface here is it's something slightly different to what I usually do, and this is on the back of yesterday's video. Notice I'm wearing the same t-shirt. The point here is that there was a huge feedback from you guys. I asked for 3,000 likes. You gave 6,000. So thanks very much on that. It was a very big showing from yourselves. The point here is I'm going to make these a little bit shorter to get through all of my thoughts. If you're uncertain about something that I'm explaining here, which might not fit the traditional narrative, the mainstream, maybe some other YouTube accounts that go through a lot of say on-chain data or repeat the same sort of rhetoric when it comes to what should be going on in the economy and maybe more like logical thoughts, by all means, let me know in the comment section down below. But with these videos, markets are basically sideways, and I want to share with you my thoughts around what's going on. As obviously we've been here for years, markets have done what I guess we've kind of expected them to do, put in bottoms, push up into new all-time highs. Meanwhile, the masses were doing the opposite at the time, getting very fearful for recessions, etc. Bitcoin collapsing to 10 grand. None of that stuff transpired. So I guess I want to share with you now my thoughts of what's going on, considering where we find ourselves in this current cycle. The idea here is that I'll do more shorter videos, and then we'll get to the longer ones as well. So like the 20, 25-minute ones, if we need to go into more detail around certain topics. But essentially, with the macro understanding, most things remain relatively the same day to day. There's not too many changes, although the media, 99% of content creators, influencers, mainstream media, whatever you want to call it, reports that you see, weekly stuff, daily stuff, something needs to be going on to keep us entertained. And if you want entertainment, maybe you've come to the wrong place, but I hope to try and entertain as much as I can with my thoughts on here. Now, if you want to get into more detail, links are in the video description for our TIA report, our free crypto trading workshops coming up, and of course, TIA Premium, where a lot of the guys are putting together their own investment plans for their long-term financial success. So with that in mind, and I thank you once again for all of the feedback yesterday, 500 comments, loving it all. I'm not going to change too much here on the channel, but I do want to give you more of my thoughts on, and I might make this a bit of a series so that I don't have to screw around with YouTube titles all the time, which takes a fair bit of time, which you wouldn't believe. But yeah, it's basically going to be my thoughts on. Nothing much is going to change in terms of the information that I'm sharing with you guys. But as I said, yeah, I'm going to go through it and hopefully give it to you a little quicker. And I'm not going to do these type of intros with every single video. So just to let you know, I really appreciate that yesterday. And if you do want to see more like this, let me know. The like button helped so much. Again, let's go over 3,000 if you like this. Now I'm going to try and keep it under 15 minutes. I'm back in the office. I will do more outside in the future. Okay, let's kick it off with the CPI data here. Now this has come out at 3.5. The forecast was 3.4, and the previous one was 3.2. All stuff we know. This, of course, has now scared the market, but what I've been talking about for months on end is that interest rates seemed too cheap, or at least the masses believed we should have been cutting rates all along. Now, this was back in January of this year. Essentially, the masses, the majority, believed interest rates were too high. They needed to be cut every single meeting because, my God, we couldn't afford 5.5% interest rates. But what is most important is what is the market telling us? And pretty much almost every single time, whatever the masses do, whatever the media thinks when they're telling us everything's too expensive, the cost of living's getting too high, people can't afford stuff, we're going to go into a recession, rent's too high, mortgages are too high, food's too high, energy's too high. I mean, yeah, it's true. It's very, very expensive. But we're trying to trade the market, not trying to decide what our neighbors should be paying and not paying in their daily budgets. That's the difference we need to make here. The news appeals to the emotion. If we're here for investing and trading, we need to appeal to something a little bit more objective and just focus on the data. So they didn't cut rates, and they haven't cut rates in January, in March. It doesn't seem like it's going to happen in May. And as I was posting something fresh to my X here, which I suggest you follow down below because I can update it a lot easier with some quick updates here. There was only the chances of 3 interest rate cuts just a couple of days ago. It dropped to 2 interest rate cuts, and now it's down to, this is it here, this shows 2, and now it's down to 1 interest rate cut for this year. As you can see here, so quickly on this one, you can see this was 2. You got the blues here, no cuts June, no cuts July. Maybe there's going to be a cut in September, pause again in November, and then cut in December. But that was so close. And now this has even shifted up just in the last hour to show in December. See right there, 0.5 and 0.6. Now there's only going to be 1 cut in 2024 with the talks of potentially a hike. So, I mean, this is exactly what we talked about at the beginning of the year in January. What if we don't get the cuts? What if the Fed does not cut rates on the same timeline that the masses believe they should? Even a pause could be seen as a negative for the market price. Next minute, down goes the S&P 500. Now, granted, I thought this would have happened sooner, meaning the S&P would have gone down, but it seems like this is now the time where we've got the largest correction since October 2023. It just pipped the January correction in terms of points and in terms of percentage. So now we have an overbalance in price. What we would next look for is an overbalance in time. And we'd have to count the days down, which was about 5 there. It was 14 days to the breakout, but now we have more days down. So we're getting to this point of an overbalance in price and time, which suggests we are on track for the seasonal pattern here of a potential sideways grind. And sideways doesn't mean a straight line like a dead heartbeat monitor. A sideways grind can mean anything like a trading range. So that's basically the trading range there. So we got a 3% so far. I wouldn't be concerned if it fell all the way to around 5,000 points because you got the low in here and you got the high up here. So anything like that, it is what it is. It's still within all of the seasonalities that we've come to expect. And then once you get out, once the market, and I put this in January, once they get over the initial shock, this is in January, like there you go, 15th of January. Once the initial shock is over, investors will realize the market was doing just fine with the interest rates where they were and can start investing again. Meanwhile, they'll probably wait for the dump and then for the markets to recover to levels above where they were before the interest rate decisions. Do the opposite thinking, don't overthink it. That's typically what happens every single time. So maybe we come down and then it becomes, oh, this is the collapse, it's over. We're going to see further downside, etc., etc. I've covered why I don't think this is the case. If I had it up here, I don't. Basically, the 18.6-year cycle. Interest rates can go up, they can go down, they can pause. We're in the stage of the cycle where asset prices will keep going up. So that's basically my thoughts on the interest rates and what happened with the CPI. I mean, it's basically been flat when you look at it going back to July of 2023, but everyone sort of gets scared just based on the previous month. The main thing you'll note from trading and investing is people have such short-term memories. And I mean, I've been doing this since 2006 or 7 when I first bought my property. I knew nothing. And then 2010, late 2010 is when I started trading. And I thought things would change. I couldn't believe that people don't look at history. And I mean, here we are. I mean, this is what's happening. They look at the month prior and think, oh my God, it's flying up and we're going to hit 8-9% again. That's not really the point. It doesn't really matter. What's happened over the last 9 months has been fine. We've gone up, we've come back down. Everything has continued up because we're at this stage of the cycle. So we could see inflation rise. We could see interest rates rise, and it will keep going up until a certain point. Now, I'll get onto those points later. Quick look here. Longer term cycles, 60-year. This one might need a little bit more detail, which I might put in future videos. So, if you want, let me know in the comments. But essentially, 60-year cycle, 45-year cycle. The point of this is interest rates rise for 30 to 40 odd years, and they come down for 30 to 40 odd years. Why? That's anyone's guess, but it's essentially what's going on in the economy at the time, and it seems to be very cyclical. I've looked at this in previous videos, and we've taken it back. I think it was, even to early 1900s. So this has got 120 years of data of pretty cyclical stuff, up for 20, 30, 40 years, down for 20, 30, 40 years, typically 30 or 40 years because of that 60-year cycle. And within that, you also have periods where the bonds or the interest rates, you can see it just doesn't have a straight line down, but you can see it comes down, goes up, comes down, goes up. But over the longer term, you can see it's a bigger line. So it's essentially that same sort of graph that you would see where you see this sort of thing happening. You've got an average through the middle, you got higher, you got lower, and then eventually that happens. And then within that particular cycle, you've got your own cycles there that are going on. But this happens over a very long period of time, so people forget and they don't really decipher each of these cycles. Why would the news decipher these ciphers? It's not in their interest. It doesn't really matter. So within that, you'll have periods of roughly 22 to 23 months of ups and downs, so almost 2 years, but not exactly. And that might be what we're at the beginning of now. We're at the beginning of a longer term interest rate rise, maybe over the next sort of, 20 odd years to go. 20 to 25 years, because this started somewhere around the 2010s to 2020. It doesn't necessarily start right at that bottom. So it's something to keep in mind moving forward, that we might have to get a little more comfortable with higher interest rates. But when you look at it over the course of history, 4 or 5% really isn't that high. It's about average, really. So that's the interest rates. Now, a quick thing just on the S&P 500. Essentially, this one is just showing the equal weight version. S&P has held above the 50-day moving average for 100 consecutive sessions. That's the 5th longest streak in nearly 30 years. Persistent medium-term uptrends tend to lead to further gains over the next 2 to 3 months. I'm not necessarily buying that we'll have to see further gains over the next 2 to 3 months because of some of the seasonality we've looked at here. However, I think over the longer term, we'll probably see higher prices towards the end of the year as well, as I suggested in late 23 and early 24, that the opening price will probably be lower than the closing price. So the closing is going to be higher. End of the year is going to be up overall. So that's in terms of the S&P. That's where we currently sit. Should this be a grind, so be it. We know some of those lower targets there at roughly 5,000 points. Everything is sort of within where it should be for now, especially after a very significant move to the upside. And so if this occurs, maybe Bitcoin will see some sort of turbulence. We've talked about Bitcoin already being in some sort of trading range. We're now into our 40. You can join me for the day count here. 43rd day within the $60,000 to $74,000 range. Now I've measured that from the 28th of Feb, the first time it broke into $60,000. Hey guys, just a quick interruption. If you're enjoying this type of video, make sure you hit the subscribe and the notification bell. I'm going to try and keep the titles as my thoughts on, and YouTube might not push this out to you if it doesn't suit their algorithm. So if you do want to see it like this without all the emotions and the different types of titles, let me know. Get it over 3,000 likes, and of course hit the notification so that you actually will hopefully see the content, as opposed to YouTube not delivering it to you because it doesn't meet their requirements for some sort of titled warning in the algorithm. All right guys, back to the content. In this period, I posted this on X, the emotions have been extreme. This was probably some of the most extreme emotion there, this quick move up, but really the period in March, the first 2 weeks of March was very extreme to the upside. We had the pullback, and now we're basically grinding sideways with a bias to the upside on the daily. High highs, high lows now. You can see those bottoms are confirmed there, and those tops there, even though that was almost a slight shakeout, really like a bull trap there on the 8th of April. Got my dates right there because it pushed higher and then closed back underneath those levels. And then the day after was basically a quick flush down, closed above the 50%. And then yesterday is basically tested lower and then closed back above, but still under 71,000. So this is that chop period. It's basically 28 days underneath the all-time high, 43 days in this zone. I guess most are wondering what happens next. We've got the halving coming up. What do you think is going to happen? I've mentioned before, I honestly don't know what happens on the black side. I'm looking a little bit more longer term. I still think we could chop in a range here, and it could go to a new fresh high somewhere around the high 70s, maybe out to 81. I've shown why with those price ranges, the extensions, fib extensions here up to 50% levels. So essentially high 70s to low 80s. And if that gets rejected and we come back underneath these all-time highs at 74, well, that would mean maybe we'll come back and test some of the 60s or mid 60s again. If it breaks down into the 50s, that's fine. The main thing I'm looking at here is the larger range, anywhere between 50 and 80. it's still fine for the bull market. Absolutely okay. What does that look like in terms of a percentage? Let's go from the top here, about 80, down to about, low to mid 50s. It's still a 35% range. So it's not crazy. It's still very much within the realms of a normal correction for Bitcoin over the course of its history. It would be more than what Bitcoin has done throughout this bull market. But I mean, that's just part and parcel of the game, right? It's what happens moving forward into cycles. When things get more volatile, you might expect more volatility to the downside. But that doesn't change the macro structure here. Within what's going on within this sort of framework of Bitcoin, well, that can lead us over to altcoins. Yesterday, I said in this video here that altcoins have now confirmed their correction. That happened, for some, happened weeks ago. For others, they're still confirming now. And for a very few, they are holding up relatively well. So for now, Solana's holding up relatively well. Render's holding up relatively well when you look at the chart. And I'm talking about the altcoin against its Bitcoin value. Again, that might be for a future video if you want to know more detail, but I do go into this in a lot of detail with TIA Premium so that you can assess whether your altcoin is going to be a strong horse in the next stage or if it's going to be a weaker horse. A weaker horse would show weakness against Bitcoin because Bitcoin is showing strength right now. If your altcoin is showing strength against its Bitcoin value, let's click on to Solana. If it's showing strength against BTC, all right, I've got to close out this. There we go. Then it's possible in that next stage of the uptrend that it's going to hold its ground and keep going higher. I know that's contrary to what some influencers tell you, and it's like basically buy the stuff that keeps going down, but it's going down for a reason. And typically that's what happens with stocks as well. It's the same psychology that's happened forever. People think that you got to buy stuff that's low and it's got a chance of pumping to its previous all-time high. You want to be buying stuff that's relatively strong at this stage because it's showing signs of strength in the face of weakness, like an overall market weakness. That's what Warren Buffett says when it comes to, his saying of when the tide goes out, you can see who's got their pants down. That's essentially what that means. If the tide goes out and those stocks or cryptos go out with it, go down, then they're the weak ones. They're the ones that got their pants down. The stuff that's you got the pants up, that's the strong stuff. That's what the meaning of that quote is from Warren Buffett. So, yeah, for me, nothing's much changes on the macro here. It's still sitting pretty healthy. It's still got its 7 green months up. April, obviously 20 days to go here. And it's still within its swing count as well. We've got 1, 2, 3, 4, 5, 6 on the count. We haven't seen 7 yet to push a little higher, but it could happen, just like April 2021, bit of a reversal. Nonetheless, we'll continue to follow up with that on BTC, but really nothing much has changed there. I thought I would just mention this for the altcoins because the beauty about this is you can now start to find the strong ones and it's the time to get into those strong ones. So that's the beauty about looking at crypto now because it gives you that vision to see what is strong and what is weak. Now, just a quick look at the total cryptocurrency market cap, excluding Bitcoin, ETH, and the stable coins. That's what I've got here on the chart, TIA crypto. There we go, excluding this and the stable coins. We're coming up to the halving. This still looks like a pretty clean pattern, even if we were to correct further. It doesn't really matter in the macro sense because it's still in a healthy, strong position. Where that becomes weak is at the macro 50, should this remain as the top at 636 billion, and it starts to break roughly, for a nice round number, 400 billion. If that was to get down there and break under those levels, that would be quite weak for the altcoins, which would mean, well, you'd probably consider that the altcoin cycle's over and everything's about to come down. But we're not there yet. Everything's still looking all right, even if we did get a correction back to 500 or mid 400 billions at a kind of almost worst case scenario. So keep going, look for those strong altcoins. And the Bitcoin dominance is still on its way up. So it doesn't mean that altcoins are going to pump tomorrow, but it's within that period of looking for the strong ones. I don't try to pick the bottoms. I don't try and sell the tops. I just like to sell into strength and buy into weakness, and I try and find the weakest times. And I think those weaker times are coming up now. around the halving, it's probably going to get a little bit more volatile, and you're probably just going to have to uh, choose your fights a little bit more careful at that time. For now, Bitcoin dominance is trying to go on the charge here to break past 55, 56-ish percent. Our 50% levels at 56, and then these lows from the previous drop in the DeFi summer of 2020 are roughly about 57, 58%. So keep that in mind to see whether Bitcoin can get to that price for rejection there, which would then mean you'd probably see more money flow into ETH, Solana, altcoins, and potentially some more stable coins as well, because this one includes the stable coins. So that's a look at everything there, Bitcoin and the cryptocurrencies. Let me know what you think. Do you want to see more like this? I've enjoyed putting this together. Give me over 3,000 likes so I know that. I think I did about 20 minutes here, and I'll try and keep it under to around 15 minutes in the future without that big intro. Otherwise, enjoy your day. Let's rock it on. If I can get this working, it'll work. And I'll see you guys in the next video. Thanks again. Take care and peace out.